National Bank of Rwanda Schools Quiz Challenge Grand Finale 2025. My name is Vanessa Katana, and I'm honored to be your host for this event today. Allow me to extend our deepest gratitude and welcome our distinguished guests, the Honorable Governor, Honorable Deputy Governor, the Honorable Minister of Education, Representative for Minikofin, Director General of Rwanda Education Basic Board, RwandaTV Board, the Principal, College of Business and Economics at the University of Rwanda, and all our BNR staff in their respective functions. Your presence here today signifies the importance of education and economic literacy in Rwanda's development. This afternoon, I'm honored to take you through the NBR Schools Quiz Challenge 2025, where we'll witness the top 2 best secondary schools facing off in the challenge. This year, 44 teams across the country faced each other in a challenge that covered financial concepts, monetary policy, the mandate of the National Bank of Rwanda, and many more. 2 schools out of 44 are here with us to compete for the NBR Schools Grand Finale 2025 Championship. Now, let us welcome the finalists of this year. Representing the city of Kigali, we have St. Ignace High School. A round of applause for them as they take the stage. And all the way from the southern province, we have Collège du Christ-Roi. Let's have a round of applause for them as they also come to the stage. First of all, I'd like to congratulate the students. Well done for coming this far. We know it's not easy, but welcome to the grand finale of the NBR Quiz Challenge. Are you ready to start? Yes, you are? Okay, so the schools are ready, and so are we. And I would like to ask who wants to go first? Christ-Roi, okay? We'll go with Christ-Roi first. So we're going to get into our quiz. So we do have key guidelines for this competition. Each school is always represented by 4 students. The competition starts when they're all present, and the competition consists of 4 segments. The scores will always be announced after each segment. And during this quiz, we thought it was wise not just to give the students information, but to introduce some gamification. So we have joker cards that will be used during the quiz. The students are familiar with this, but for our viewers who are not, we do have joker cards that can be activated anytime during the quiz competition. And we have the pause button or extra time, which can be activated once the students feel like they do still have something to contribute, but they're out of time, and this can be done for 30 seconds. All jokers, as you remember, can only be activated once during the quiz. Okay, we do have double the points. This can be activated before the students view their question. So that means before your question is projected, remember to activate your joker card. Okay, and lastly, we do have lucky number, and lucky number is activated at the end of the quiz. Once you want to activate your lucky number, do let us know and we'll do so. For the double the points, once it's activated and the students get the right answer, they're given double the marks for the correct answer. So let's get into the guidelines. Segment 1, we have true or false. These questions are asked in a close-ended format. The 2 teams will go against each other and will face off. Each team will alternate, and each segment has 10 questions to be answered within 30 seconds. Each question weighs 4 points, and within this segment, we cannot activate our jokers. Christopher, are you ready? All right. Question 1. Question 1. In BOP, transactions involving immovable capital assets such as land and buildings are recorded in the financial account when the government unit is involved. True or false?
The right answer is true.
Incorrect. The answer is false. Question number 2, St. Ignace. The National Bank of Rwanda uses credit ceilings as a primary tool under the price-based monetary policy framework. True or false?
False.
False, that's correct. Question number 3, Christurua. The affordability of financial products is not a key factor in measuring their quality, as price is determined by market competition. True or false?
The answer is false.
False, that's correct. Question number 4, Centenias. Entities admitted in NBR's regulatory sandbox are allowed to offer financial services at full scale without supervision. True or false?
Answer is false.
The answer is false. That's correct. Question number 5. Money markets provide short-term financial assets that includes certificates of deposit, treasury bonds, and commercial paper. True or false?
The answer is false.
False. That's correct. Question number 6. Financial inclusion is only about access of financial services. True or false?
False.
False. That's correct. Question number 7. Demand pull inflation occurs when production costs increase, leading to higher prices. True or false?
Correct answer is false.
False, and that's correct. Question number 8. The key fact statement is provided solely after signing a loan contract. True or false?
The answer is false.
The answer is false. That's correct. Question number 9. The National Bank of Rwanda sets an upper limit rate for the buying and selling of different currencies that forex bureaus cannot exceed. True or false?
The correct answer is false.
False, that's correct. And lastly, question number 10. The yield curve represents the relationship between the returns on treasury bonds and their maturity dates. True or false?
Correct answer is true.
True, and that's correct. And that brings us to the end of this segment. And our scores are the judges: Sentinas 20 and Christua 16. Segment number 2, which is face off. As you are aware, each team member will have a turn to answer a question during this segment. Okay, and each segment has 8 questions, and they weigh 6 points. So we'll start this time with Centenias. Within this segment, you can activate your joker. So whoever is taking the first question, you step forward close to your mic, and the rest will step back. The first question will be yours. The rest can step aside. So question number 1, Centenias. Define 2 factors can influence macroeconomic stability and name at least 2 examples of each.
Thank you for your question. The 2 types of factors that can influence macroeconomic stability are internal factors and external factors. Within internal factors, that's where you find factors such as natural resources, population size, and geographical location. While in external factors, you find in events that can happen in other countries that might influence the macroeconomic stability within our country, and natural disasters as well that might happen within our country, which might destabilize the macroeconomic stability. Thank you.
Correct. 6 points for you. Thank you. Who's taking the second question? Okay. Chris, question number 2. Explain at least 3 factors that can influence lending rates.
Okay, there are 3 factors that can influence the lending rates. The first factor that can influence the lending rate is the market conditions. So the conditions that the market are going to influence how the banks are going to be lending money to the people. The second factor that is going to influence the lending rates is the risk factors, or the risk at which the banks are. For example, let me take an example. For example, if there is a high risk of losing or borrow or of extending credit to the people, and you find that when you extend the credit to the people in the economy or any person who wants it, there is a risk of losing that money. So the bank will consider this risk. Again, there's the funding cost, or the cost of funds, which can be Also, a good determinant or a good factor that can influence the rending rates. I think those are the factors that influence the rending rates.
Thank you very much. That's very correct. 6 points for you. The next question. Okay, question number 3. Explain how monetary policy affects inflation and economic growth in Rwanda.
Thanks for the question. First of all, monetary policy is the use of various instruments that the central bank can control to influence the availability, use, and credit of money in the economy. Then, how it affects inflation, it may use contractionary monetary policy to restrict inflation. Like if the inflation is going up, it may use contractionary monetary policy by increasing the interest rates for the prices to go low so that the economy can be stabilized. And it can use also expansionary monetary policy to boost up demand, aggregate demand in the economy, whereby people will spend more, investment will increase, which will raise up the economic growth. Yeah, those are the two instruments, the way it can stabilize inflation by a contraction in monetary policy, and for economic growth, expansionary monetary policy.
Thank you. Let's hear what our judges deliberate on that.
Okay, yes, thank you very much for your answer. Okay, I would like to clarify a little bit. The expansionary monetary policy you mentioned won't stabilize inflation. It would rather increase inflation a little bit.
Sorry, I said the contractionary monetary policy is used to affect inflation. Maybe if inflation goes up, it restricts that inflation by using contractionary monetary policy tools. Then for economic growth, I used expansionary monetary policy as for boosting aggregate demand, where consumption spendings will increase, business investments increase, and this will increase economic growth of the country.
And
That's what I
and
explained.
yes, and what would happen to inflation?
And what will happen
What
to
would-
inflation when
Inf-
that happens?
Inflation.
Yeah.
When there is high consumption and spending, of course, inflation, um, as the prices are like low because of many demands, this will stabilize inflation low and stable because of aggregate demand comparing the supply, aggregate supply. Yeah.
Thank you. We'll wait for the judges' results.
Okay, 5 points.
5 marks out of 6. 5 marks out of 6. Question number 4 goes to the second student of Christopher. What types of deposits are covered by the Deposit Guarantee Fund, and list 4 types of deposits that are excluded?
The types of deposits that are covered by the Deposit Guarantee Fund are what we call the protected deposits, which are the deposits in the account of the customer, excluding those loans owed to financial institution. And the 4 types of deposit that are excluded have the deposit of interbank exchanges, have the deposit of government agencies, have the deposit of insurance companies, have the deposits of
As you think about the deposits that are excluded, please repeat the deposits that are included.
okay, the deposits that are covered by the Deposit Guarantee Fund are what we call the protected deposits, which are the deposits in the bank account of the customer, excluding those loans onto that financial institution.
Thank you. Judges?
Thank you. She was able to get the types of deposits covered by the Deposit Guarantee Fund and gave 3 types of deposits that are excluded. One of them that she didn't mention is deposits from pension funds and others from collective investment schemes. Thank you. So she get awarded 5 marks.
5 marks for you. Thank you. Third student from St. Ignace. Question number 5. Briefly describe 2 essential conditions for monetary policy effectiveness and explain how the central bank ensures its monetary policy works. Conditions for monetary policy effectiveness. We have the first one of having um, legal and regulatory frameworks that enable the rules set by the central bank to be obeyed and well regulated. The other one is the monetary transmission lag. This is the difference, the time it takes for the monetary policy that has been adopted to affect the economy. So when it's well understood, also the monetary policy will be effective. Another thing is availability of accurate information, which also enables the creation of monetary policy. And then how the bank ensures its monetary policy works. Um, Pause button, please.
Pause button. Yes. 30 seconds more for you.
It ensures its monetary policy works also through those legal regulatory frameworks that are supposed to be um, 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 that all financial institutions are to follow, and the financial institutions are supposed to follow all these legal frameworks that have been put in place, and also uses it uses the instruments such as interest rates, where it can increase interest rates to reduce money in circulation or reduce these interest rates, and use various instruments also
And
as
your
open
time
markets.
is up. Thank you very much. We'll hear from our judges. Thank you.
Okay, thank you. Thank you for your answer. Uh, you did well on the prerequisite, on the way monetary policy is conducted. The correct answer should have been on the key indicators the central bank check or look at before deciding on interest rates. But you explained how maybe the interest rate may be used to affect the overall objective of inflation. So it's also correct, even though it was not exactly the question you asked. So we give you 5.
5 marks for you. Thank you very much. And question number 6. Explain 4 reasons why Rwanda is currently prioritizing financial inclusion for all.
Okay, thank you. The reason why Rwanda is currently prioritizing financial inclusion for all is to drive or to make the most vulnerable society and the poverty so that they can step out of the poverty by using the financial services. The other one is to drive the economic growth of the community and also helping them to achieve the growth. And the third one is this financial inclusion leads to all kinds of individual benefits, such as the ability to start and grow businesses, and also to pay for the education of the children so that we can have an educated education. The fourth reason is that through the availability of various financial services through this financial inclusion to all people, women and men can get to the productivity and also achieve equality in the community.
Thank you very much.
Full marks for that question.
Full marks.
Full
Okay,
marks.
thank you. 6 marks for you. Question number 7. What is a financial system and what are its key components?
Thank you. A financial system is a set of network institutions like banks, and they ensure currency exchange and stock markets. And some of its components are money, uh, monetary policy instruments, financial instruments, financial markets, financial institutions, money, and central bank. Thank you.
Can you please briefly say what those components are, like a brief
Oh, yeah, yeah.
description of them?
So the central bank is the one which sets the monetary policy and makes sure of the money in circulation and regulates it. Then the financial instruments are the one which are used in order to regulate that money in circulation. Then the financial institutions are those who make sure that there is exchange of money and transfer of goods, transfer
Time
of
up.
transactions.
Thank you very much. I think you got 4 marks for that.
Yes.
Thank you. 6 marks for you. And the last question, what are the requirements of investing in government bonds in Rwanda, and explain 4 benefits of investing in them?
Thank you. The first requirement for investing in government bonds is to have a minimum of 100,000 Rwandan francs, and the second is that since those securities or bonds are stored in the Central Securities Depository, you will need to open a bank account with the assistance of any bearer or brokers. And then about the benefits of investing in them is that you are contributing to the growth of the economy because such money can be used to develop infrastructures. Second benefits of investing is that they offer relatively high returns since their interest rates are high and they are paid biannually, so you can reinvest the funds or yes, take them. The third benefit of investing in them is that they have high liquidity, which means that you can exchange them on stock market or be used as collateral. And the last one is that a pause button, please.
Pause button. 30 seconds more, please.
And then the fourth benefit of investing in bonds is that they are safe and risk-free since they are backed by the government, so they are considered nearly risk-free. Thank you.
Thank you very much. 4 marks for you. And that brings us to the end of this segment. And we move to segment 3, and the points are?
Christopher 23, Saint Ignace 22.
Thank you. So for this segment, Christua will take the first question, and questions are asked in a multiple choice format. The segment has 6 questions in total. Each question weighs 4 points, and you can activate your joker. You answer the question within a minute. Are you ready? Question number 1 for Christua. Which instrument involves the NBR buying or selling government securities to manage liquidity? A. Central bank rate. B. Reserve requirements. C. Open market operations. D. Foreign exchange operations. What's the correct answer?
The correct answer is C. Open market operations.
Thank you. That is correct. Question number 2 to Saint Ignace. What does the reserve requirement ratio dictate? A. The maximum loan size a bank can offer. B. The interest rate banks charge each other. C. The amount of money banks must keep in the central bank. And D. The amount of government debt banks must hold.
Correct answer is C. The amount of money banks must keep in the central bank.
Thank you very much. That's correct. Question number 3. Which of the following is not a component of the current account in the balance of payments? A. Goods and services account. B. Secondary income account. C. Foreign direct investment account. And D. Primary income account.
Okay, thank you. The correct answer is C, foreign direct investment account.
Thank you. That is very correct. Question number 4. Why do countries periodically rebase their GDP? A. Adjust GDP data to reflect changes in their interest rate over time. B. It helps measure inflation more accurately by adjusting for changes in the cost of living. C. It ensures that GDP calculations reflect the current economic structure. And D. It revises government budget allocation to align with new economic priorities. What's the correct answer?
The correct answer is C. It ensures GDP calculations to reflect the current economic structure.
Thank you. That is correct. Question number 5, Kisturwa. Why isn't printing money and distributing it to all people a viable solution to eliminate poverty? A. Money will be spent on imported goods. B. It will result in inflation. C. The central bank can't afford to print that much. And D. People won't know what to do with that money.
The answer is B. It will result in inflation.
Correct. It will result in inflation. Question number 6. Which of the following statements is true regarding the eligibility and exclusions of deposits under the Deposit Guarantee Fund? Deposits from collective investment schemes are covered if held in foreign currency. B. Interbank deposits are eligible for coverage if they are placed between 2 contributing banks. C. Deposits from pension funds are excluded regardless of whether they are in local or foreign currency. And D, government or public agency deposits are covered if held in a commercial bank.
Correct answer. The correct answer is C. Deposits from pension funds are excluded regardless of where they are in local or foreign currency.
Thank you. That is correct. Question number 7. Which of the following is not a potential consequence of unsustainable fiscal policy? A. High tax increases. B. Severe spending cuts. C. Financial instability. And D. Increased foreign direct investment.
The correct answer is D, increased foreign direct investment.
Correct. That's accurate. Question number 8, Centenias. The following statements are correct except A. International investment position is one of the main accounts for external sector statistics. B. Usage dimension measures the actual habit of using financial services and products by individuals and firms to meet their financial needs. C. The twin deficit theory explores the relationship between a government borrowing and a current account deficit. And D. A foreign person or business selling products in a weak exhibition is classified as a foreign direct investment, FDI. So,
The correct answer is D. A foreign person or business selling products in a weak exhibition is classified as a foreign direct investment.
thank you. That is correct. And it brings us to the end of this segment.
And it's a tie 16-16.
It's a tie 16-16. And now we move to the last segment of this quiz, Lifesaver. Just to remind you to activate your jokers, double the points. You have both activated extra time or pause button. So within this segment, questions will be answered within 2 minutes. Each question weighs 10 marks and you can activate your joker. So question number 1 goes.
Sorry. We will activate our joker of double point on the last question of Lifesaver.
The last question of Lifesaver, the joker point has been activated by Chris Turua. I think we start with Centenias for this segment. Centenias, question number 1. Suppose a country has positive macroeconomic outlook better than the present conditions. Which shape is the yield curve likely to take, and explain why? 2 minutes.
Anyways, so I think based on the question, the shape of the yield curve is going to be okay, how can I describe it? It's going to be a normal yield curve which has a positive gradient, which means that as the question states, we will have a positive macroeconomic outlook, which means that you will have better economic conditions in the future more than the present. This normal yield curve will take a forward gradient or normal yield curve because it will have it will be reflecting an increase in economic activity in the future, and it is most likely to happen because a normal yield curve normally is whereby you can see that the future investments or long-term investments have higher yields than short-term ones, which means that the macroeconomic outlook will have better conditions and thus take a positive shape.
Time's up.
Guess the full marks for this
Full
question.
marks, 10 marks. I see a sigh of relief. And the next question to Chris Turua, question number 2. Assume the inflation rate in Rwanda has risen to 10%. Using your knowledge of contractionary monetary policy, propose 3 actions the National Bank of Rwanda would take to address this situation and explain the impact of each recommendation. 2 minutes for you.
Okay. When the inflation is high, a the National Bank of Rwanda take the following actions. First, it raises the central bank rate, which is the primary interest rate that affects the overall interest rates in the economy. Increasing these interest rates will discourage borrowing. Discouraging borrowing will discourage investment and spending, which will lower the demand in the economy. And this lowering of the demand will lead to reduction in prices, which is the reduction in inflation. And another thing that the central bank can do is using its other tools such as repos, where it will sell government assets, and this will lead to the withdrawing of liquidity from the public, which is among the primary causes of inflation. The last thing that the central bank will do is issuance of treasury bonds, where those treasury bonds will help in withdrawing the liquidity from the public. Yes, this also will lead to reduction in the money supply. The central bank overall can reduce the money supply.
Thank you very much.
Full marks for
Full
this question.
marks, 10
Yes.
marks for you. Question number.
I would like to activate the double joker on the second question of our team.
So you mean question number 3?
Yes.
Okay. Joker activated for question number 3. Sentinas. Question number 3. Explain at least 2 accounts in external sector analysis and describe one unique role each plays in economic analysis.
Okay, thank you. I will list there are 3 key accounts in external sector analysis, but I'm going to explain to you only 2 and state a unique role of each. So the first one is BOP, which stands for balance of payment, and the second one is international investment position. Now, the BOP is a comprehensive analysis or report that shows all transactions that happen between one nation and another, and it thereby shows the trade that happened between foreigners and residents. It also shows the unilateral transfers that happen, such as such as worker remittances as foreign aid. It generally gives a comprehensive analysis of how the trade and it also captures the investment flows within its financial account, which also shows the different investment flows within the country. So the international investment position holds a unique role because it has what we call an IIP net, which is an international investment position net, whereby it analyzes basically the assets that we have on foreigner goods, or our claims on foreigners' assets and their claims on our own assets, thus enabling an external sustainability approach, and is also a key factor for external debt analysis. Thank you.
Thank you. Time is up.
He gets the full marks for this question.
Full marks, 10 marks. So that's 20 because you doubled your points on this question. Congratulations. Question number 4 for Kisturwa. Identify 5 key components of a credit report, and for each, explain how they significantly impact an individual's credit worthiness.
Okay, thank you. There are several key components of credit report, and I'm going to list the 5 of them. First of all, we have the credit information. For the credit information,
First component in the credit report, there is the personal information, which includes the names, the date of birth, and even the social security number. The second component of a credit report, we have the types of credit accounts opened, like yeah, the types of credit accounts opens. And the third component of a credit report, we have the types of credit, which can be installments or credit cards. And the fourth component of a credit report, we have the credit score, which is a numerical value proving the credit worthiness of the consumer. And the fifth component of a credit report
The date is the time and date of issue and the company that issued that report, and then how they significantly impact individuals' credit worthiness. I'll give an example credit mix. The number of credits that you have will increase the likelihood of creating a credit. Then another how is like credit utilization. The less of your credit, the more of the credit you utilize, and or the less will impact your credit worthiness. And another I would give is new credit and increase the frequency of applying for credit will impact your yes, and then
Time's up. Thank you very much. The judges will tell us.
He gets awarded 8 marks. The team gets awarded 8 marks. I think it's important to mention that they said credit cards twice, so it's supposed to be under credit accounts. So one factor that they didn't say is outstanding loans. So that can also it's also reflected on the credit report of an individual. So they get awarded 8 marks for this question.
Thank you. 8 marks. Next question for Sentinas. Question number 5. How do overvalued and undervalued exchange rates influence a country's trade competitiveness, and how might a prolonged economic downturn, typically a depression, assuming there is no external debt pressure, further impact this dynamic?
Thank you. So an overvalued and undervalued exchange rates. First of all, an overvalued exchange rate is whereby, let me put it this way: when you have an overvalued currency, that means that the other countries will have much difficulty in buying your products, that is your exports, which means that exports will now become less than imports since you have an overvalued currency, while in an overvalued exchange rate, that's where you have whereby foreign countries are easily buying your exports. Now, an overvalued exchange rate reduces competitiveness because we know that the more you need to export more than you import in order to become more competitive. In other words, have a greater trade balance. But since you have an overvalued currency, you'll be less competitive. Now, economic downturns might reduce this because when we have economic downturns, the level of economic activity is already low, GDP falls, unemployment rises, and you have less profitability of businesses. That's what I can explain.
Thank you, and time is up. Judges?
Okay, thank you. Thank you for your explanation, and congratulations, did it well, but you forgot to mention what would happen for an undervalued exchange, even if it's vice versa.
I did mention that undervalued make imports. I did mention that undervalued make exports less more easily affordable to the countries, so they reduce competitiveness. It's the opposite value of overvalued.
Yes, but in case of economic downturn,
Oh, in case of economic downturn, an undervalued exchange rate, since we are exporting more than we are importing, it helps to stabilize the economic downturns, thus not leading to severe and prolonged downturns.
yes, you can mark now.
4 marks. Thank you. 10 marks for you. And the next question to Kistua. Question number 6. Explain 4 reasons why fiscal deficit is used as a measure of a country's creditworthiness and macroeconomic stability.
thank you. A fiscal deficit. This is when the difference between a this is when the difference between what the government expends and the difference between what the government or revenue generation. That means the expenditures exceeds the revenues. So the first reason why fiscal deficit is used as a measure of creditworthiness is that it shows if a country is likely to pay or service its debt well. So when there is a fiscal deficit or when the expenditures are more than revenues, the country will not be able to repay its debt well. Second is that it can be used as a measure of a country's creditworthiness because fiscal deficit shows the ability of a country to remain sustainable. That means its debt cannot be or it cannot default on its own. Third reason why fiscal deficit is used as a measure of country's creditworthiness and macroeconomic stability is that when expenditures exceed revenues, there is no macroeconomic stability. There is instability in the country because the revenues the country cannot get much revenues. Third is that no fourth is that it will undergo financial instability because it will try to undergo significant policy changes such as steep taxation or severe spending cuts, which will generally worsen its debt dynamics and make it almost impossible to
Time's
repay
up.
its debt. Thank you.
Thank you very
They
much.
get the full marks for
Full
this question.
marks for you, 10 points. Question number 7, which is the last for Sentinas. Explain main security features on Rwandan banknotes and give 4 reasons why the National Bank of Rwanda does not print more money for everyone.
Okay, the main security features on Rwanda banknotes. First of all, security features are features introduced on banknotes to deter counterfeiters from reproducing country's currency. Now, the 4 reasons why NBR does not print more money for everyone. First of all, as seen before in this unit, we do know that printing more money would eventually lead to inflation if the printing of more money is not backed with increase in supply of goods and services. I think another reason why NBR does not print more money for everyone is just because printing more money for everyone in the economy would also incur a lot of costs for the NBR itself. Not to say that it can handle it, but it would incur extensive costs, which might not be good for the financial stability.
Another thing, it would reduce the purchasing power of people as a unit of currency will buy less products, and it also lead to higher cost of production for farms as we'll spend more on the production. And then if they wanted us to say the security features, I think you didn't mention them. There is the watermark, the shining feature, the window thread, and feature for the blind, for the visually impaired.
Then
Another thing is that it would incur strict measures
Time
on.
is up. Thank you. You did save the day because we did want those security features. So well done for reading into that. The judges?
All right, so they got correctly the main security features, but on the effects of printing more money, I think they missed 1 or 2 points. So we are going to give them 8.5 for this question.
8.5. Thank you. And this is the last question for Kristurwa. Double the points have been activated. Kristurwa, briefly describe any 2 dimensions of financial inclusion and explain 4 potential benefits of Rwanda becoming a cashless economy.
The dimensions of financial inclusion, the first dimension is uptake and usage, where we have uptake, which is the act of meeting requirements or completing the procedures that grant the financial consumer the right to use the financial product or service, and the usage, which is the actual habit of employing those services by individuals and firms to meet their financial needs. Another dimension is the access dimension, which is a dimension which measures if there is availability of affordable and appropriate financial services to a given individual, and it has three aspects, which are it checks the availability. Okay, that's not necessary. And the benefits of becoming a cashless economy.
The benefits of becoming a cashless economy is that it will reduce the instances of counterfeits, and also it will increase the transfer of money as an electronic value. So people will not be prone to dangers like being counterfeited or loss of money or theft. And the other potential benefit of becoming a cashless economy is that it will improve the payment system and also the cross-border transactions. So this shows how it will improve the repayment system. And
In addition, a benefit of becoming a cashless economy again is that it will help in reducing time lags, or it will increase the timeliness of those payment systems, because we know electronic systems are more faster and more efficient. So it will increase efficiency and
Time is up.
timeliness. Thank you.
Thank you very much. And the judges?
Get a full marks, and I believe they had activated the double
Yes.
points joker.
So that's 20 points for you. Well done. And now that brings us to the end of this segment. And judges, yes, please go ahead.
Chris Roy 48, Saint Ignace 48.5.
48.5 and 48. And now, would you like to activate your lucky number? Yes. Just read to us whatever number, you just show it. Show us the number you picked. Question number 3 for Saint Ignace. And question number 2. So we'll go with question number 2 first for Christoua. Lucky number, question number 2. Okay. What does the real sector primarily focus on? A, the balance of payments. B, production, consumption, and investment. C, financial institutions and credit flows. D, public sector revenue generation.
Okay, the real sector primarily focuses on the B, production, consumption, and investment.
Correct. 2 points, extra points for you. Thank you. Question number 3 for Saint Ignace. Which of the following is an intermediate target of monetary policy? A, reserve requirements. B, inflation forecast. C, 7-day interbank rate. And D, repurchase agreements.
The answer is B, inflation forecast.
B, inflation forecast. That's correct. And ladies and gentlemen, that brings us to the end of our National Bank of Rwanda Quiz Challenge 2025. Congratulations. And now, as we wait for the judges to deliberate on our final mark, or if they do have them, please go ahead. Today, the first runner-up and the second and the winner of the quiz challenge will walk away with different awards, including laptops, certificates, and the National Bank of Rwanda is going to invest treasury bonds for you. So congratulations for making it this far. And now, let's have the results to know our winners for this quiz challenge. Go ahead.
And the winner is Saint Ignace.
Congratulations. Congratulations, Saint Ignace. And congratulations, Christoua. You made it this far, so it's not a loss. Well done. Allow me to invite the Honorable Minister of Education to deliver his remarks. Welcome, Honorable Minister.
Good afternoon. First of all, I wanted to congratulate the teams. You did such a fantastic job, and I'm sure that in the next few years you'll be sitting here as the employees of the bank. Honorable Governor and colleagues, I wanted to thank the bank for the work that's doing. And actually, I was chatting briefly with the governor that we'd like to see the other sectors do the same. This is one way of encouraging the students to take interest in various sectors of the economy, and also to encourage them to pursue their studies so that they can contribute to the development of our country. The work that has been done and the interest that's being generated across the country, I think it's a great thing that we're seeing It's a great thing that you're doing, and I really wanted to congratulate you and to thank you for the work you're doing. I was told about this quiz just a couple of days ago, and although I had other things to do, I said make room for me to attend and actually see these kids in action. And I must say, that I was impressed. And some of the questions, I don't know if I would have gotten right. So, it's an opportunity for me to learn as well. I wanted to also say something about the other schools that didn't make it to the final. You've seen that there were quite a number of schools that competed in this competition. As in any competition, there is always a winner, but I think they are all winners. To see what they've done throughout these couple months of competition since February. So the two teams that made it here, they went through the competition at the regional level. At the regional level, they went to the competition at the quarterfinal, semifinal, and the final. So there were other teams that didn't make it here today, but were equally champions and equally successful in as far as that they've learned quite a bit and they've expanded their knowledge in what the bank does and in the economic sector of Rwanda. So congratulations to them as well. So mine was really a quick word of thanks to the bank, and as well as recognition to what the students are doing. So I won't be long. Just wanted to thank you all for being here.
Another round of applause for the Honorable Minister. Thank you very much for your remarks. And now allow me to invite Honorable Governor for her closing remarks. Welcome, Honorable Governor.
Thank you, Vanessa, for being a very good MC today and moderator for this quiz. Honorable Minister of Education, Honorable Deputy Governor, representatives of government institutions, and dear guests, dear colleagues, good afternoon to you all. It's really a pleasure and an honor for me to be able to be here with students today that were competing on the NBR Quiz Challenge. And some of the questions, actually, I was asking my colleagues whether I would have them right. So we really commend your efforts in understanding economics and finance and the role of central bank in our economy at such a young age. So congratulations again to the finalists, but also to all participants to this quiz challenge. So this NBR Quiz Challenge is part of our broader BNR Engage program, created to empower young people like yourselves with an understanding of how the economy works and the role of the National Bank of Rwanda. Through this challenge, we aim to demystify our work, but also give you tools to better understand economic indicators and economic decisions that affect your daily lives. We believe that financial literacy is a form of empowerment, one that helps build a stronger and more informed generation. But beyond promoting financial literacy and demystifying complex economic ideas, this initiative is also about planting seeds. We aim to spark a deeper interest in economics and finance matters and nurture the next generation of Rwandans and Rwandan economists and policymakers. But of course, we also want to plant a seed for future central bankers, and we're hoping that the 8 finalists we've seen today, probably all of them or 90% of them will choose the Central Bank of Rwanda in the future as their employer. So when we started this journey in 2019, we only had 36 schools that took part. But this year, we are happy that we have 44 schools across the country that have taken part in this competition, including 3 new entrants. And among them were students that have joined us for the first time, which is proof that the interest and curiosity among our young people is growing. So to conclude, we want to also thank the teachers and the heads of the schools that participated for encouraging their students to not only take part in this competition, but to accompany them until the finals and the different rounds. This is really very encouraging for the central bank to see that the next generation of Rwandans not only takes interest into economic and finance matters, but that they have the support they need to be able to grasp these complex ideas, concepts of our economy. So we want to thank also the schools, all those 44 schools that participated, and we hope to be able to attract even more schools in the next BNR quiz challenge going forward. And once again, we want to thank you very much, Honorable Minister, for being with us and for showing support to the students in economics and also finance matters, and for the interest in central banking. So without education, I don't think we would have what we call world-class central bankers in our country, really shaping the economic policies for our country, and our collaboration with not only schools but the ministry itself can only grow stronger as we continue to collaborate on this important initiative. Thank you very much to all, and again, congratulations to the winners and all participants.
And now this brings us to the close of our NBR Quiz Challenge 2025. Thank you for gracing us with your presence. Rakoze Chane, have a great day.